Hi, everyone. It's Sid here from Fundamental Research, and our guests today are George Botros, President of AWM Diversified MIC, and Chuck McKitrick, Chairman of the Board of Alta West Capital. AWM is diversified MIC, primarily focused on first mortgages. We're expecting AWM to offer a yield of 7 to 8% next year. So the agenda for today is I'll kick off the call with some tips on how to efficiently analyze the MIC space. George will take over from there and introduce us to his MIC. Listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. Here are some key disclaimers. Please take a moment. Okay, so let's get started. In case you're not familiar with MICs, let's take a quick look at what a MIC does. A MIC typically provides short-term, typically 1 year, loans secured by real estate assets in Canada. They are required to invest at least 50% of their assets in residential mortgages in cash. Unlike banks and traditional lenders, MICs are more flexible in their lending guidelines and offer individually structured or tailor-made loans to meet the specific requirements of a borrower. Banks also have lengthy due diligence process and are typically not able to meet borrowers' capital needs as quickly as MICs. Lending rates of MICs tend to be in the 5 to 12% range, while yields range between 4 and 9% per year, which is significantly higher than banks and traditional lenders. Now, we estimate that there are about 200 MICs in the country with a total assets under management, AUM, of $13 billion. This means that the sector accounts for just 0.8%, less than 1% of the country's 1.6 trillion residential mortgage market. This slide shows the key metrics we look at when analyzing MICs. Number one is the assets under management, or AUM. The largest MIC in the country is Timber Creek Financial. It's a publicly traded company with $1.2 billion in AUM. There are about 25 MICs with AUM over 100 million in the country. AWM and its funds that it manages, they have a total assets under management of about $250 million. Number two is the target property type, which ranges from single and multifamily units to construction and development projects. We believe that already built single family homes or units have the lowest risk among all property types. Number three is priority or exposure to first mortgages. Higher the exposure to first mortgage, lower the risk. Number four is the average mortgage size. Again, we believe higher the average size, higher the risk for a fund. Number five is loan to value. MICs tend to have loan to value between 50 and 70%. This means that property prices have to drop at least 30% for them to start losing capital. In comparison, banks have LTVs of up to 95%. Another point we look at is how diversified the portfolio is. Larger MICs tend to be more diversified. AWM is exposed to Ontario, BC, and Alberta. The next factor we look at is default and foreclosure rate. This is a very critical aspect for us. If default and foreclosures are high, we know that we are not dealing with the best manager out there. Finally, and probably the most important for investors, are the lending rates and yields. Lending rates of MICs tend to be in the 5 to 12% per annum, while yields range between 4 and 9%, which is significantly higher than banks and traditional lenders. Now, Canadian banks raised mortgage rates last month. Yields have been rising due to expectations of rate hikes. However, we believe rate hikes will be slower than market expectations due to slower economic recovery amid the Delta variant and slow vaccination rates. As interest rates are expected to remain low over the next 6 months, we believe MICs offer an attractive opportunity to generate higher yields. In terms of the residential market, the residential markets have cooled slightly in the past few months. That said, there are increasing concerns of overheating. Although the CMHC has a high risk rating, for market vulnerability for Toronto and a low risk rating for Vancouver, they have assigned a low risk rating for overvaluation to both cities, meaning the CMHC does not believe that residential prices in Toronto and Vancouver are overpriced. The Liberal government has proposed initiatives to cool Canada's housing market while being pro-immigration. Being one of the most highly vaccinated countries in the world, Canada has already started seeing an increase in new immigrants and students. Although price corrections are likely, maybe we think under 10%, we have a positive outlook on the residential real estate market in the country. With that, I would like to welcome George and Chuck of Alta West Capital. George, you'll be able to share your screen. Please go ahead when you're ready.
Sure. Thank you very much, Sid, for the MIC overview, your insights on the MIC space. Very insightful and very much appreciated. I'd also like to take a second out on behalf of Chuck McKitrick, Chairman of the Board at Alta West Capital, myself, and all the staff at Alta West Capital thank you very much for joining us today. We hope you learn a little bit about the MIC space. If this is your first time learning about it, or if this is your first time learning about Alta West Capital, we appreciate it and we hope you get something out of this. It's really important for us right now, you know, as far as Alta West Capital goes and the story of Alta West Capital, it starts with something about helping Canadians. You know, we've been established in 1991, we're a national lender, and really we're trying to help Canadians either get into homes or help Canadians with their financial success. Again, we're a national lender since 1991. We try on the investment side to provide consistent monthly returns year over year. Our vision is to become a portion of your fixed income portfolio on the investor side. On the mortgage side, we're an alternative lender. We have many mortgage brokers on the line today, and a lot of alternative lenders say they're common sense lending. Well, we are a common sense lender, and we've been recognized by our brokerage community as being the top alternative lender in 2021 by CMP magazine. We thank all mortgage brokers for this, and that is a truism of our system. We are a common sense lender. Okay. Why Alta West Capital? The very first thing, Alta West Capital, it's a potential to increase yields in your portfolio. We all want to retire someday, and we need yields for that. Distribution of monthly dividends. A lot of MICs out there right now do quarterly distributions and do annual distributions. We used to do quarterly distributions. About 3 or 4 years ago, our investor base came back and said, you know what, why don't you do monthly? We'd like to have a little bit of our cash in our hands a little bit quicker, and we get to make the decision whether we're going to reinvest or whether we're going to use that cash. We responded, and we went to a distribution of monthly. And finally, investments backed by real estate in Ontario, Alberta, and British Columbia. We are asset backed, just like Sid said, and we're about 99% residential mortgages. Sticking with the why Alta West Capital, 2 really important things on this slide: independent fund analysis. We're here hosted by FRC. Thank you very much. So we do the independent fund analysis, and our investor advisory board, again, headed by Chuck. We have foreclosure lawyers, security lawyers, finance professionals, and most importantly, we have actual investors in Alta West Capital. We take direction from our investors. Chuck, did I miss anything on that?
Oh, well said, George. That investor advisory board, which we started up several years ago, has been just a real blessing in our shop, and even especially through the pandemic, the direction we got from them and just the support was fantastic.
Absolutely, we couldn't have done it without them. Heading over to the benefits of Alta West Capital. Number 1, we have no hidden fees. You're never going to get an invoice from Alta West Capital saying, hey, this is what you owe us. We charge a 2% management administration fee on our funds, but this is only on share capital. Really important when you're making a decision on deciding which MIC to go to. We don't charge on leveraged capital. That's pure spread interest to our investors. Professionally managed, over 30 years in business. We are not a fly-by-night. We have been here for 30 years. We commit to our investors. We commit to our mortgage broker partners. We say what we do and we do what we say. Return on investment. Chuck and I are both incredibly proud to say that in over 30 years of business, we have never had a negative yield at Alta West Capital. And diversification. Diversification is very, very important. Again, we have some mortgage brokers and we have some real estate professionals on the line today. A lot of people invest in one-off mortgages. This is a pool of Diversified has over 730 mortgages. No one mortgage will bring down that fund. It's really, really important. Not one mortgage will make or break any of our funds. Okay. So now I'd like to move into what do we have at Alta West Capital? Alta West Capital has $250 million of assets under management, all mortgages. We don't do car loans. We don't do visas. We just do mortgages. That's what we know. That is what we know. And we do what we know. We have 700 plus mortgages under administration and predominantly one-year terms. Okay. Continuing with what we have at Alta West Capital, loans in our portfolio are generally one-year durations. Very, very important. As we move into a higher interest rate market, we are more responsive. Okay, we will not, we renew every single year and we're able to pass along some of that to our investors. Risk management in our mortgage approval process, it's very important. Quality of the deals that go into our portfolio. We look at things like property location, loan to value, borrowers' credit ratings, income verification, independent valuation of property values. We had a discussion earlier this week where we adjudicate like a bank, but we add common sense to that adjudication.
Mm-hmm.
Again, we thank the brokers that have nominated us as Alternative Lender of the Year. It is because we do that. We are common sense. And really at the end of the day, another super important thing is we offer reasonable lending rates to qualified borrowers. And in turn, we offer investors, with a good rate of return, with a goal of capital preservation and consistent monthly dividends. Chuck, would you agree?
George, well said. I think that as you're speaking, we've talked about the investors and the board, and you just mentioned the brokers who awarded us this wonderful national achievement. But it's also that symbiosis we have with the broker community, that they do part of our vetting for us, and they're a great resource to us, as well as the relationship we have with our investors.
Absolutely. Couldn't have said any better. They're partners. We do this together. Our MIC advantages. What is it about Alta West? Well, Alta West provides portfolios that consist of first and second mortgages if you invest in Diversified. We offer first mortgage fund only if you invest in First Place. We offer a termed yield, term maturity investment if you invest in the SIF. We have a loan to value with a goal of reasonable risk reward rate of return. The mortgage funds have never had a negative yield. And again, our management fee is only charged on shareholder capital. Very, very important aspects when you're considering mortgage investment corporations. How are investment returns generated? Just jumping into this. I know Sid touched on this, but we love this little slide. Every time a new investor comes on board, we like to show them this. Starts on the left-hand side with our investors. Nothing happens without our investors. Share capital comes into Alta West Capital through our exempt market dealer. We in turn offer short-term mortgages to our borrowers. And really simply, our borrowers are great. They've been fantastic. 99.something% pay on time as agreed. We take that and we send it off as a monthly interest dividend to our investors. It's a really simple model, and we like to keep it simple. Hence, we don't do other things. Okay. Now, the next few slides I'd like to go through are some sample investors. Of course, these aren't actual names. These aren't the actual investors, but these are real life investors at Alta West Capital. First person, financial controller. First invested 4 years ago. Assets of $450,000. Annual income of $90,000. The investor was looking to supplement her pension with other investments. Really important, she has a high risk tolerance, but would like the potential of consistent returns, specifically in that fixed income portion. Invested in Diversified. Found a solution. Our next investor, a bit more savvy, dentist, has invested here for 5 years. Annual income of $1 million. Total financial assets of $6 million. Invested into the capital markets, but really didn't fully understand why the fluctuations in the capital market. He understands real estate investments. Very simple. We showed him that one slide, how we have our investors and we have our borrowers, and that income flow. Loved it. wanted high returns on his fixed income product, had a combination of first place and diversified, totally worked for his financial situation. Our third investor, retired former owner of an electric company, sold the company, I believe, for $60 million or so. Total financial assets of $51 million. In the last little while, he had sold a building, did not want to send all the inheritance out right away, and also wanted to do some donations, but wasn't at the right time to do it. Wanted to take a few years to evaluate a few things. Instead of parking his money where he wasn't making a decent yield, did a combination of diversified and our strategic income fund. Bought a 2-year term, figured that 2-year time frame was enough for him to make his investment decisions. Great, we found a solution for him as well. And finally, our fourth investor, a nurse, has a wonderful pension. Wasn't too worried about her day-to-day living expenses. Really looking for alternative fixed income solutions backed by real estate in Canada. Really loved the fact that she was investing in Alta West, helping other Canadians, and her making a better rate of return on her fixed income product. Chuck, you and I have talked. Would you agree that we've tried to be that investment for all Canadians?
Yeah, George, you're right. It's great to see those examples, and we have changed names around, of course, but it's still a reflection of what we have as investor in our investor pool, and it does represent a pretty broad spectrum of Canadians, and it's a great privilege to be helping Canadians with their financial health. Absolutely.
And we say this all the time. We do not want every single dollar in your investment portfolio, but we feel that there's a lot of value for us to be part of your investment portfolio. So we just like to say that. Now we go on to why is now a good time to consider Alta West Capital mix. Well, we touched on, actually Sid touched on some of this, and we touched a little bit on it. Number one, potential inflationary hedge. Interest rates are rising in 2022. I think we can all agree to that. How much they're going to rise by, we do not know. But the one thing is we're responsive at Alta West Capital. We only do 1-year terms, so we are able to pivot. Influx of immigration. Immigration Canada wants, I believe, 400,000 new immigrants into Canada for the next 3 years. That's 1.2 million. That's over 3% of the population of Canada today. We want to help those Canadians. Why not? And our target return is 7 to 8%. That's as of today, based on today's metrics. If metrics change, we will change, again, because we're responsive to that. Okay. A few of the investment vehicles that we have, I touched on this a little bit earlier. Our diversified MIC is a combination of first and second mortgages. First place MIC is just first mortgages, and our strategic income fund is a termed investment, termed yield, termed maturity investment, where we're offering 3.15 for maturities 2023, 4.15 in 2024. It's really important to note on here, the 2021 yields for both diversified and first place are a little bit lower. That was the pandemic year. We're super proud to say today that our monthly dividends are on the rise. Last month, 7.39% for diversified, 5.75% for first place. And we believe there's room for them to even grow more. This is the right time to invest. You're at the right cycle. Chuck, would you agree?
It is, George. And you know the stat on what in that yield, the security is backed by what percent is in first mortgages on diversified?
In diversified alone, we believe it's about 83% today is first mortgages.
So you get a great yielding investment vehicle that is incredibly secured by first mortgages.
Absolutely. And something to even add is our funding LTV is 70%. That's at funding. Interesting. If the market increases, that actual funding loan to that current loan to value is probably lower than 70%. Okay. So right now, kind of the final leg of this presentation is what percent of your portfolio is fixed income? Again, we've talked about this a lot in our shop. We talk a lot about diversification within assets. Financial planners talk about that. Here, we like to talk about diversification of asset class. Shouldn't be in just equities. We shouldn't be in just fixed income. We shouldn't be in just real estate. there should be a wide breadth to all investment portfolios. Again, I think, Chuck, you have alluded, we both talked about this a fair bit, correct?
Mhm. Yes, very frequently. Yeah, we have, depending on where you're at your investment cycle, your age, what your portfolio holds, what your goals are, how conservative or aggressive you are, all that will impact what percent of your portfolio ends up in a product like ours.
Absolutely. And, and in just a little bit of, this is our final slide here, but really Alta West Capital, we offer the benefits of coming gear is we offer diversification of your portfolio. Our goal is to provide more consistent returns. And we never had a negative yield since inception. Immigration is on the rise. Our mortgages are one-year terms. We're responsive to investors. We're responsive to borrowers. We try to help Canadians on both sides. I think that's pretty much wraps up most of the stuff. And I thank you for time today. And I think, Chuck, you had just one closing remark.
George, just to reiterate what you said, you covered off who we are, what we do, where we do it in Canada, what our clients expect, not just our borrower clients, but our investor clients, as well as the mortgage brokerage community, that we're looking for investors. We're really pleased with the FRC report and the validation that provides to all those user groups. And Sid, I just wanted to say thanks on behalf of George and I for the time you've allowed us.
Well, thank you so much, gentlemen. That was very, very useful, very insightful. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand or option and I can unmute you. Before we jump into the questions, I want to highlight that one of the things we look for in our due diligence is management skin in the game. I know that management of AWM owns 5% of the outstanding preferred shares, which we feel aligns their interest with investors. So I have a bunch of questions here already. Maybe I can we can just get started. Number one, you showed profiles of sample investors. Do you mind walking us through the profile, some of the profiles of a typical borrower?
Oh, that's actually a great question. I would say our typical borrower, right now we have, over the last 4 years, just a little bit of background. Well, 4 years ago, Diversified, just to specifically talk about that fund, we were predominantly a second mortgage fund. May of 2017 onwards, we became much more geared. I think today we said we're 83% first mortgages. Our typical borrower is a self-employed person. Our typical borrower is somebody that did not get approved at the bank for whatever reason. Our typical borrower can't show income the way the bank wants to see it. Doesn't have 28 years of notice of assessments, 65 years of T4 general or T5 generals, so on and so forth. I speak facetiously, but genuinely, it is that person. Other side of our borrower is probably that new to Canada borrower, that person that hasn't established all that credit. It's the person that can get approved at the bank. And really, we
were talking about that. We were talking about that. What split do you think that we have on business for self and new to Canada?
I would say that our business to self is about, it's about a 60-40% split. 60-40 with regards to self-employed and 40% new to Canada. Ironically, some of our borrowers actually fit, a lot of our borrowers fit into both categories, believe it or not.
That's true.
Yeah.
Thank you.
But it really is that person that can't get approved at the bank.
Thank you, gentlemen. George, I know you are in our office in Calgary. I know you have a big team as well. I know that investors or attendees here, everyone likes to know how the company, is structured, how many employees, just to give them a scale of operations. It'll be very useful, I think.
Sure. We have 35 employees right across Canada, predominantly in Alberta, but we have employees in British Columbia, Alberta, and Ontario.
Okay. Is your offering only for accredited investors?
No, it's not accredited investors. We actually have eligible investors through the offering memorandum.
Okay.
We really, and I will say, this is actually, thank you for asking that question. We take direction from this is actually one of Chuck's things. He was adamant that we offer investments to all Canadians. This isn't about just a rich get richer thing. So, you know, I know Chuck will take that. I know he'll speak to that, but he's, you know, right from day one, we've always been wanting to be that investment for all Canadians, not just rich Canadians.
Good point there, Westby. You can also add, is there a minimum investment?
Right now, you know what? We're usually right around 5,000, to be honest. Okay. We'll take 5,000 to 10,000. It has to make sense if it's an RSP or anything like that, but we're $5,000 to $10,000. We have investors that we're third generation investors right now. We have grandfather, father, and now grandson in our shop. Actually, I know, Chuck, you know, 2 or 3 families like that in our shop. And yeah, with this it's an investment for all. It's not just an investment for older or richer or whatever it might be.
Oh, we've been covering at Fundamental, we've been covering the MIC space for over 13 years now. We closely monitor at least 50 MICs. We keep a track of almost all of the 200 MICs in the country. Looking at AWM's yields, we feel that their yields are on the higher end, especially for MICs focused on first mortgages. And one of the reasons the MIC is able to achieve these yields is what we think is effective use of leverage. George or Chuck, do you mind just talking about that? How do you use leverage properly, and how much do you typically aim for in terms of capital structure?
We right now for diversified has about, not to get too technical, but it has leverage capacity of up to 60% of its share capital. We are averaging anywhere between that 35 to 40% of that utilization. For first place, we're averaging about, again, right around that 50% utilization. The one thing that separates the leverage that we have is we do not take management fee on that leverage. So if we're borrowing in certain cases at right now prime plus 0.75, and we're lending out at that 499 to 599 range, well, guess what? That's pure spread income to our investor, and that's boosting up the yields to investors. Again,
and the leverage has been effective too, because the management at Alta West does not take its management fee on that leverage. Is only the share capital.
Absolutely.
That's right. A lot of MICs we look at, their management fees are tied to the total assets under management, so equity and debt, so they get paid for the entire capital that they bring in. One of the nicest things we like in the space is the attractive margins, especially if you are able to get lending or line of credit from institutions. George or Chuck, if you don't mind, can you tell us more about your borrowing rate from these institutions, so that the attendees can appreciate the margins you generate in the capital that you lend out?
He wants the secret sauce, George.
Yeah, those are trade secrets. They're not trade secrets at all. We borrow at prime plus 0.75. Plain and simple.
So
3.2%.
Just again, lending rate averages about.
Well, our lending rate is exactly actually our dollars that we borrow are at that prime plus 0.75. Our lending rates start at 4.89%, anywhere between 4.89 and upwards. It's a very here's another thing actually that's really nice, and I'll just take 1 second out. Somebody asked that question about our lending and our leverage and all that. That's actually a really nice compliment to our business, because they're like, hey, this is the box that you can lend in, because they have to meet certain criteria that actually are leverageable and are eligible. So what happens in that case is it makes us sharper lenders. If this is what an institution is willing to lend us at for this specific product, then this is what we can offer to the public, and we can scale that. We don't have to chase that double-digit yield on that one single mortgage. That's not our business. Our business is to scale what our institutional partners are letting us do, and in that way, we offer a better rate of return to our investors. Again, I
Great.
think if you want to add anything, Chuck, I think that's speak.
No, there's lots of questions there, so we should keep on moving.
Oh, my apologies.
Yeah, no, that's great because I want to underline that too, because MICs get way cheap capital from institutions. Prime plus 1.75% is available only for limited industries. How many shareholders do you have?
I believe over 400.
Yeah.
We have 400 investors.
In diversified.
Yeah. I think all in,
Can the investments-
all in, we're just shy of 500, to be honest. Just shy of 500 across the whole, all the portfolios.
Okay. Can investments be inside a registered account? The answer is yes. All MIC products or investments are qualified. What portion of the portfolio is leveraged? We have an answer to that. Another thing that MICs typically do, these are comments coming from our research on the sector and then how we look at AWM. A lot of managers have rights to 100% of the origination or lender fee. AWM also has rights to that, but they've historically paid a portion of that fees back to the fund, which we feel is very rare. Maybe that's something that gentlemen, you want to quickly touch on?
I take that, Chuck.
Well, we do. That is correct, Sid. We do use the fees on occasion to supplement the yield back into the MIC, and it depends on where the MIC is at and the fees that we're generating. But of paramount importance is that we return consistent and significant yields to our investors.
Okay. What percent of your portfolio is residential, commercial, or land development?
Oh, love that question. We're about 99% residential. Residential mortgages are the easiest properties to finance, quite frankly.
Do you mind also giving clarity on in that 99%? Are they already built properties or development, construction?
Nope, they would be 99%. Actually, even of that, I'd say 99% of that 99% is built.
Okay. Another point that we picked up from AWM is shareholders can request for redemptions anytime with no penalties, no lockup period. This is again what we think is rare in the sector. Most MICs apply penalties if you ask money back quickly. So any comments?
We want to be fair to the investor. You know, that's their hard-earned money. We're not going to do a lockup period or anything like that. It's really important. Our investors, we talked about our mortgage brokers being our partners. Our investors are our partners too. So that's incredibly important to us.
Next
So
question is,
we don't have that lockup period. I'm sorry, Sid? Sorry, go ahead.
Sorry, the next question is, can an investor use the TFSA? The answer is yes.
Can I backtrack just for 1 sec, Sid?
Yeah, for sure, Chuck.
I'm going to just go a little further on what George said about our investor base, which is absolutely true. And I've been in the company a little longer than George, and we do have these very special relationships, and our investors end up on our advisory board, and we know it's second, third generation of people. So it's a great synchronicity that we have with them, and so that is why we have chosen not to have those kind of impediments to having ownership over their own capital.
Okay,
absolutely.
We have a few more questions. I'll quickly run through them. Realized losses averaged 0.3% of mortgages historically, and that's from our report. How do you typically deal with defaults?
We work with the client first and foremost, but again, with the average loan to value around 70%, I can tell you that, ironically, today we had 4 foreclosures that just paid out on their own. Believe it or not, we're in this market right now where the rising prices and our loan to value that we're funding at, borrowers are solving that problem. We
self-remedy.
Yeah, they self-remedy, to be honest. And again, it's because of the quality of the deal that's going into that portfolio.
That's right.
So we're not doing that. And we're not doing that 13% first mortgage where we're going to have to, take a sheriff to get the guy out of the house. That's not us. We're doing reasonable lending rates, reasonable borrowers. Expectation is we're all acting reasonably. And I think our foreclosures, I could say that, I know it's in November, but we don't have the final year-end numbers, but we're going to be less than that 0.3% this year. We probably are going to be around 0.2. So that's even decreasing.
Okay, in terms of geographical diversification, over 60% of the mortgages are in Ontario. Do you have plans to expand out to other provinces?
60% in Ontario because most of Canada is in Ontario. It's the biggest province. We do lend in Alberta. We do lend in British Columbia. We lend in major urban centers that are liquid. That it's really liquidity for us, to be honest. We want to be able to lend in major urban centers that are liquid. Ontario happens to be very liquid, but we also lend in Calgary, Edmonton, Vancouver, amongst all those major centers.
Okay.
That's right, George. We have been in other provinces as well, and would hope to go back into some of them, but it does kind of ebb and flow with how that province deals with defaults. So how do you get out of a bad property?
Absolutely.
Got it. Next question.
There are a lot of questions on that side panel. Sorry.
What is your IFRS reserves against your book? So I think the question is asking what's your loan loss provision on the balance sheet. That I think I can answer that. They're about 1.2% of the portfolio has been allocated for loan loss going forward. I don't know if any changes have happened recently, but I'm guessing it would be around 1.2%. Any comments there, George or Chuck?
We usually try to average right around that 1%. We increased it a little bit through the beginning of the pandemic, just because we didn't know what the world was going to look like. We had a top-up dividend, I believe, in March for investors as of March 31 of 2021. We didn't need it. Our portfolio was performing very well, and we pushed it out. Yeah. But historically, we'd like to be around that 1 point.
Okay. Is investing in a MIC like buying mutual funds? Am I buying a unit of the MIC? Do I get an annual statement?
Yeah, I guess you could call it like a mutual fund of mortgages, except instead of putting a whole bunch of equities into said mutual fund, we're putting a whole bunch of mortgages into that, invest into that income fund. And yes, you get actually monthly statements. We don't do annual.
But in terms of structure to structure, if you keep it simple, then although we are throwing in the not equities but the mortgages, then how the investor enters in and exits is that they are buying a unit in the MIC. The unit price doesn't fluctuate, and the investor just reaps the monthly dividend, which they can then use as a drip, or they can take as cash on a monthly basis.
Okay. Another question is, are the yields mentioned net of management fees? Yes, that's the net return that goes to investors. What regulatory agencies do you file with?
Oof. There's a few. Alphabetically, or would you like us to start from west to east? Or alphabetically? I guess alphabetically would be the Alberta Securities Commission. That's number one. They're our principal regulator on the investment side. Let me see here. BCFSA would be next in alphabetical. They're the British Columbia real estate, but we also do BCSC, BCFSA, Alberta Securities Commission, RECA, Ontario Securities Commission, and oh my God, I forgive me. Is it? No, I can't remember. Forgive me. And they're a regulatory body for real estate. Yeah. Oh, FSRA. Thank you very much. FSRA, and as well.
Mortgage broker side.
That's the mortgage broker side. We also FinTrack, and of course, we're all mandated by section 130.1 of the Income Tax Act, CRA, And I know I'm forgetting one regulator, so if I'm forgetting you, forgive me.
Okay, so final question, how liquid is an individual's investment? I can answer that. As you mentioned earlier, redemption request, there's no penalty. You can pretty much redeem or retract investment anytime you choose. This is relatively new in the sector. Historically, investors or everyone thinks of private company investments as something you invest and then you forget, or it's very difficult to take money out, but that's quickly changing. I should not say quickly changing. Over the last decade, things have changed. More and more private investments are, have redemption, retraction, clauses in them, allowing investors to get more. They allow the investor more flexibility in the investment. So, I think those were all the questions. Maybe any final thoughts, and also it will be good if you can give some thoughts on, or give some comments on, how do you differentiate from other mixes as an investor? For an average investor, it's very difficult for them to differentiate or understand, or compare to a different mix. How do you differentiate, and what should an investor look for in AWM?
All right,
so George, when we start?
You can start and we'll add together.
Sure. Well, we feel that AWM Diversified is a fantastic investment tool for all investors, the neophyte to the sophisticated, experienced investor. And it's different reasons why, but we feel that it's very appropriate for both because of the consistency, the stability that we have, and the yield that they get, as well as things like the liquidity in and out, as well as the monthly dividends. But a great thing is that we have grown to a sufficient size, and we make sure that not one mortgage, George already spoke to this, not one mortgage will be so influential that it could affect the portfolio, that everyone is participating in a huge pool of mortgages. And so, and yet because of those 1-year terms, we're able to pivot quickly. So a differentiator then for Alta West is that we have not taken on undue risk, because we have a wonderful leverage through great lending partners, financial institution partners. We have such a secure first mortgage base, and then the investor reaps the dividends and the knowledge that they have a portfolio of well-performing first mortgages. What did I miss, George?
You know what? I think you've hit most of it. We've been around for 30 years. Why do you consider Alta West Capital? We've been around for 30 years. We've never had a negative yield in those 30 years. We're fair to the borrower and we're fair to the investor. Point. Yeah. I mean, no, those are the critical things. We're not here to gouge anybody out. We're not here to gouge on the borrower side. We're not here to gouge on the investor side. We don't take a management fee on our leverage capital. We only take it on our share capital. We do the monthly distributions. We really try to be responsive on that investor side, and simultaneously, because of the leverage that we get, and because of how that's made us more disciplined underwriters, we're very, we try to offer reasonable rates to our borrowers too, and that symbiosis between that's what offers a really good investor, a really good investment experience, a really good borrowing experience. But frankly, that's why you should be at Alta West Capital. That's why we think we differentiate ourselves.
And we are looking for capital.
Absolutely.
This growth that we've had has been fantastic, and we're looking for more growth because it offers a wider platform for all the investors to exist upon.
Absolutely.
Gentlemen, again, thank you so much for your time, and also to everyone on the call for taking time today. A recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to our YouTube channel, and also sign up to be a member for our platform, researchfrc.com. You'll be able to access our report on AWM and all the other companies, public and private, across multiple sectors on this platform. You'll get alerts when we publish new reports. And of course,
I'm so sorry to interrupt, but there's one final question, if I could get it in, because somebody had asked this. How do I contact Alta West Capital? How do I If I want to invest, how do I contact Alta West Capital? So you can contact us through AWC@investorrelations.ca, or I believe you're going to put our information up as well. Correct, Sid?
Yes, you'll have your information here. And also anyone after reading your report on AWM, if you have any questions, please feel free to reach out to us, info@researchfrc.com. And also you can add questions or ask questions on the profile page we have for the company on our platform. And also you'll get alerts when we publish new reports if you sign up. Thanks again, and wish you all the best and stay safe.
Thanks, Sid. Thanks for having us.
Thank you very much, Sid. Thank you, everybody, for joining us.
Yeah, that's right.